Yes, hi, good morning. I am Kimberly Petrey with Credit Union Mortgage Association. We are a loan origination company, a credit union service organization. We are owned by credit unions and we provide financing for members of over 130 credit unions across the United States. So for the smaller credit unions that do not have their own in-house mortgage department, we provide that service for the members. And one of the loan options that we offer is the reverse mortgage. So reverse mortgages have been around for quite some time, although, probably in the last 20 years or so, you have heard more about this type of mortgage. It is a unique loan that allows homeowners age 62 years of age and older to convert or borrow part of the equity in their home into monthly income or cash, a line of credit, or to finance a home purchase without having to make a monthly mortgage payment. So while we say you do not have to make a monthly mortgage payment, you absolutely can at any time pay towards the balance of the loan. The benefits to the reverse mortgage is that there are no monthly mortgage payments. The loan does not have to be repaid until the last surviving borrower passes away or the home is sold. You will always retain full ownership of the home. So if it is a solely owned home, or if you are doing you are on a reverse mortgage with a spouse, you both will be listed as owners on title to the property.
Kimberly, can I ask you to tell Carolyn when she needs to advance the slides?
Okay, of course. So we are currently in the 5th slide talking about the benefits of a reverse mortgage.
Is this the right slide? Oh, you can't see it. It says, what is a reverse mortgage?
The next slide.
Okay, here we go. Benefits of a reverse mortgage.
Yes. So, and the borrowers on the reverse mortgage will never have to leave the home. So if we have 2 borrowers on the loan and one borrower passes away, the other borrower has the protection of staying in the home until they pass away, or if they decide to sell the home. So we're going to move on to the next slide and talk about the qualifications. You must be 62 years of age or older, live in the home and maintain the home as your primary residence, have sufficient equity in the home, not be delinquent on any federal debt, and there are no credit score requirements like we have with our traditional forms of financing that you're probably most familiar with. But we do conduct a financial assessment, and we pull a credit report to look at the existing liabilities that you have. whether that's a mortgage, a home equity line of credit, installment loans, auto loans, or credit cards, to see that these liabilities have been paid on time. If there has been some financial difficulties and there were issues, extenuating circumstances that prevented timely payments, you can still move forward with a reverse mortgage. We would just need a letter of explanation stating what those difficulties were.
Kimberly, can you explain, one of your bullets says you have to have sufficient equity in the home. How much is sufficient?
Yes, so the equity or the monetary eligibility, that is the amount of equity that you can borrow, is figured from the age of the youngest borrower and the interest rate. This gives us a percentage. These percentages are referred to as principal limit factors. They are published by HUD, and they do not change regardless of what lender you are speaking to. So that is one thing that, does not change. So for example, if we have right now with a current interest rate of 6%, and we have a borrower that is just 62 years of age, they would be able to borrow about 37% of the value of the property. So as we are right now in a raising rate environment with all mortgages, how this impacts reverse mortgages is these percentages that we refer to as principal limit factors are lower. So if we use an example of the same borrower at 62 years of age with a 3% interest rate, that borrower would be eligible to borrow about 54% of the value of their property. So if we don't have any more questions, we'll go ahead and proceed to the next slide.
I'm sorry.
So reverse mortgage loan proceeds are tax-free, and you can draw the eligible funds in several different ways. You can take a lump sum disbursement. You can set it up to where you receive a fixed monthly amount each month, or you can establish a line of credit. This line of credit would be similar to a home equity line of credit. You would have access to all the funds in the line of credit and can request funds as needed. The unused balance of the line of credit has a growth rate. So this would be similar to an account, say a savings account, earning 2%. Right now, the line of credit growth rates are between 6 and 7%. So if we have a starting line of credit of $50,000, that line of credit is going to be growing at either a 6 or 7% rate. So even if you are taking periodic withdrawals from your line of credit, as long as there is an unused balance or a balance remaining in the line of credit, that is going to grow at the growth rate.
Okay, we have a question here. How do you determine the value of someone's property?
Very good question. We will do that by ordering an appraisal. So an appraiser will come to the home and inspect the home and use the comparable property sales in the area in which you live to determine the opinion of value.
There's another question. What happens if the home value declines during the reverse mortgage period?
That is a very good question. You wouldn't be too concerned about the decline in property value while you have, through the course of the reverse mortgage. However, when the loan becomes due and payable, and we'll get to that in the next few slides, this is a non-recourse loan. And if at the time the loan is due and payable, either the last surviving borrower has passed away, or if the borrowers decide to sell the home, if the property value at that time is less than the mortgage balance, the HUD will accept 95% of the appraised value at that time for payment in full for the mortgage. So let me give you an example. We have a reverse mortgage with a balance of $200,000. And the last surviving borrower has passed away, and the heir to the property has decided to sell the home. The property value is only $175,000. The heir to the home will sell the home, and 95% of $175,000 is $166,250. That money will be used to pay off the reverse mortgage that has a balance of $200,000. The remaining mortgage balance is forgiven, so that the heir, or in the case of the borrower selling the home, is not left with mortgage debt after the home is sold.
Okay. And another question, what if one has a home but no mortgage? Is it possible to do a reverse mortgage on the equity in the home?
Yes, absolutely. This is the most desirable scenario for borrowers interested in pursuing a reverse mortgage. We talked earlier about how the eligibility is determined. If you have an existing mortgage, the total monetary eligibility has to be enough to pay off that mortgage. If there is a shortage, so let's say that the borrower is eligible to receive $200,000 from a reverse mortgage, but they have an existing mortgage of $225,000. There is a shortage there of $25,000. The borrower may choose to move forward with the reverse mortgage, but they would be required to bring $25,000 to closing. So as you can see, if you are a borrower that has an existing mortgage, you would be refinancing that existing mortgage with a reverse mortgage. Okay, so if we don't have any more questions, we will move on to the next slide, uses for reverse mortgage proceeds. Basically, there are no restrictions for how you use the funds borrowed from a reverse mortgage. A lot of folks take out a reverse mortgage to help with healthcare costs. They may need home health care. They may have an existing mortgage that they want to refinance with a reverse mortgage, so they no longer have a mortgage payment, thus improving your monthly income flow. To relieve a financial burden on children or family members, if your children or family members are helping you with your expenses from month to month. You may need to do some repairs in the home, or possibly do some home improvements. Again, we could supplement the income with a stream of funds or a monthly payment to yourselves. You may want to travel or use the funds to buy a new car or go on vacation. These are some of the most common reasons for borrowers considering entering into a reverse mortgage. So again, there are no restrictions. The money received from a reverse mortgage is considered tax-free funds. It does not affect your Social Security, your pension or retirement, but it could have an impact if you are receiving Medicaid. So if you are an individual receiving Medicaid and are interested in pursuing a reverse mortgage, you would want to speak to the Medicaid office on how this may affect that process.
Could we be on the next slide? There we go.
We're moving towards the next slide now. How much will a member or a borrower qualify for? So we discussed this a short time ago. How much will you qualify for? This depends on, again, the age of the youngest borrower, the appraised value of the home, and the current interest rate. So based off of the age of the youngest borrower and the interest rate, this gives us a percentage. These percentages are referred to principal limit factors, and they are structured by HUD. So let's move to the next slide. When do I pay back the reverse mortgage? There are no monthly mortgage payments. While you are continuing to fulfill the requirements of the reverse mortgage. And one of those requirements are that you must live in a home and maintain the home as your primary residence. So if you were to move out, sell the home, or in the case where the last surviving borrower passes away, these are all events that would require the loan to become due and payable. Now, if you leave the home for a short time, say an unfortunate situation occurs and you may have to live out of the home, say to go to rehabilitation, but after the rehabilitation, you plan to come back to the home. That is allowed, and that is not an event that would require the loan due and payable. So you would not have to pay back the loan. If something happens where you leave the home, an unfortunate accident or for health issues, and you have the plan of returning to the home, but something happens and it is determined that you would not come back to the home, there is a year grace period. So once you have not returned to the home after a year and there is, no plans on returning to the home, if you are the only borrower, then the loan would be called due and payable. So you would have to determine if you're going to sell the home or possibly a family member would be taking the home. possibly moving into the home, that is fine, but the reverse mortgage would have to be refinanced or paid off. So if the heir or a family member is going to take over ownership of the home, and they are not 62 years of age, they would not be eligible for a reverse mortgage. So they would have to get their own financing to refinance the reverse mortgage, or they could pay the mortgage off by some other means. Maybe they have cash, they would pay off the reverse mortgage, and then they would be the primary owner of the home.
I have a question here. Where does the profit to the reverse mortgage lender come from?
I'm not sure I understand the question.
Well, I think what they're asking is, how do you make money doing this?
Okay, so good question. There is, based on the rate, just like a conventional mortgage or an FHA mortgage, the rates that are presented to the borrower and what the investor will purchase the loan for is how we, or me or my company as the lender, make money on the mortgage. So we originate the loan, process, underwrite, and close the loan. When the loan is closed, the loan is sold to an investor who services the reverse mortgage. When that investor purchases the loan, just like in your traditional Fannie Mae loan or your FHA loan, they purchase the loan for a price from the lender. And typically there is some profit in that, but when we were talking about mortgages, the price of having a mortgage is the interest that you pay based on the interest rate. So the entities that service mortgages, whether that's a reverse mortgage or a forward mortgage, that's how money is made, is based on the interest.
So if I can rephrase that just to make sure I understand, if I'm getting a monthly payment from my reverse mortgage, a certain chunk of that is going to that interest payment, and then I get the rest of it. Is that correct?
In a sense. So based on the total monetary eligibility, say we have a borrower that is eligible to receive $200,000 from a reverse mortgage. Depending on the age of the borrower, be that if we were talking about a borrower that is 62 years of age or 72 years of age, the monthly payment is going to be more for the older borrower, because the assumption is that a borrower that is 62 years of age will live longer and have the mortgage longer than a borrower that is 72 years of age. Then from the total monetary eligibility, that is determined how much you can draw each month. You can have a monthly payment for the tenure of the loan. The tenure of reverse mortgages is really unknown because there are factors that require the loan to be called due and payable. However, when we are originally setting up the loan calculations are based on the starting age of the borrower through the age of 99 years. So we can set this up as a monthly payment for the tenure of the loan. Or you can say you need a certain sum of money each month for a certain period of time, maybe 5 years. Maybe you are 62 years of age and you are going to retire, but you're going to work part-time. You may not want to start collecting your Social Security until you're 65 or 68 or 72. You want to wait as long as possible to be able to collect the most Social Security that you can. And you need a certain sum of cash for however many years. We can set it up that way as well. Each time you receive a monthly payment, that amount is added to the mortgage balance because essentially we are lending you $500 a month. So when you are paid that $500, it is added on to the mortgage balance, and this is what you are paying interest on. So you pay interest on borrowed money. If I can just add to that, if you are a borrower that has an existing mortgage and you are refinancing that mortgage with a reverse mortgage, your starting mortgage balance for the reverse mortgage would be your closing costs plus the amount of the mortgage that we refinanced. If you are a borrower that has no existing mortgage and is taking out a reverse mortgage, say to get a small sum of cash and maybe establish the rest of the eligible funds in a line of credit so that if you need it in the future, it is there for you. Your starting mortgage balance would be the closing cost plus the sum of cash that you requested at closing. Most people decide to finance their closing costs. That is not required. If you would rather pay your closing costs out of pocket, you have the option to do that as well. Which brings us to the next slide of the reverse mortgage closing costs. So you have your typical mortgage closing costs, which consist of the credit report, a flood certification, the appraisal, your title fees, your title insurance, any charges that the title company has for preparing the title work, the title search, the recording of the deed or trust or mortgage, depending on your county and state requirements with the county and county records. And the other fees that come with a reverse mortgage is mortgage insurance. So this product is an FHA insured mortgage. There is a mortgage insurance premium that they collect, that HUD collects, which is 2% of the home value. Some look at that as, well, if I have a property valued at $300,000, 2% of that is $6,000, which is your mortgage insurance premium. And some may say, well, wow, that's pretty expensive, or that's a high cost. But you have to remember that, one, HUD is insuring this loan, which gives you which comes with benefits. So for the borrower, it provides them the protection that if the lender or the company that's servicing the loan goes out of business, HUD will step in and guarantee your reverse mortgage. This is important if you are someone that is receiving a monthly payment option or has a line of credit option. You want to continue to have access to those funds.
And Kimberly, we're about
The
10
other,
minutes to 11, just so you know.
okay, thank you. The other benefit is the non-recourse feature that we spoke about earlier. Because there's an undetermined term for the reverse mortgage. We don't know when the home may be sold, when the last surviving borrower will pass away. We don't know what our economy will be. We don't know what home values will be. But you have protection in that if your reverse mortgage balance exceeds the value of your home, that you or your heir are not left with mortgage debt. Because in that scenario, if HUD will accept 95% of the appraised value of the home at that time for payment in full for the reverse mortgage.
I have a question.
Since we're running, yep.
Somebody wanted to ask, what's the average closing cost on say, $100,000 house, for instance, with no existing mortgage?
The closing costs would be probably between 5,000 and 6,000.
Okay. And you talked
So
about
I'm
interest rates. Are there additional service charges or other things that we should be aware of?
There are no service charges on reverse mortgages. The lender, depending on the loan, there may be an origination fee charged by the lender. This would be a fee that would vary from one lender to the next. The interest rates would be, there are some differences in interest rates between each lender. So if this is something that you are considering, I always recommend, talking to a few different lenders. Find someone that you are comfortable with, that you trust, that you build a relationship with, someone that spends time with you to talk about what your goals are, why you are considering entering into a reverse mortgage. And if you are with the right lender, they will work with you in helping you determine if this is a good option for you and your scenario. So oftentimes, after speaking with borrowers and learning about their scenarios and what they're trying to do, the reverse mortgage may not be the right option. There may be other options that will work better for them. So when you are, interviewing or talking with various lenders, these would be some of the things to look for. Of course, it's always best to get rates, get an estimate from the 3 different lenders, and make a comparison on where you think you will get the best deal.
Are reverse mortgages all fixed rate, or are there variable rate reverse mortgages?
There are fixed rate and there are variable rates. If you are someone that is considering a line of credit or a monthly payment option, those options are only available through a variable rate.
Okay,
The
next question.
fixed rate,
Go ahead.
Yeah.
Uh,
a
well,
fixed rate mortgage is referred to as a closed-end mortgage transaction, meaning once that transaction closes, you cannot go back and access any additional funds. This is true in regular mortgages as well.
Can you refinance a reverse mortgage if interest rates improve?
Yes, you absolutely can. You would still have the same closing costs, title fees, appraisal fee, credit report, but you would get a credit towards your mortgage insurance premium. So you are not double charged for that. If your original reverse mortgage, your property value was $300,000 and you paid a 2% of that for your mortgage insurance, and you are refinancing and now your property value is $350, you would only pay the mortgage insurance premium on the added $50,000. So do we have any other questions?
Let me say one thing if I could. I had a reverse mortgage for like around 10 years, I think. And yes, how they make money is because there's a fee every month, and the balance on that gets bigger and bigger and bigger. I think by the time I sold my house, I was up to right around $600,000 that I owed on the reverse mortgage. But it met certain needs and worked quite nicely for me. And because of living in North Arlington with a great big piece of land, I actually made a considerable amount of money after you deducted the 600. So it was there, it worked very nicely. And
Well, good, Mike. I think that each person needs to take into account their own situation, but you in fact told us about your success with a reverse mortgage some years ago. I think, Gary, we should stop our recording and see if there's any other last comments from Kim. Any other final questions?